Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market update. Hope everybody is doing well. So in today's markets, guys, a little bit of green after yesterday's massacre in the markets. The bears, once again, guys, unable to follow through with any sustained drawdowns. You can take a look on the SPY here, guys. Every time we got some of these one-day crushes in the past few months, the bears have just not been able to follow through with further extended drawdowns. So your bulls just remain in complete, absolute control for the moment. But we're going to take a look into the charts a bit later and determine what do the bears actually need if they want to put together a sustained movement to the downside. Now, in today's news, guys, we did have a couple little news events. Number one, we had a jobs report come in from the private sector, which showed that the jobs market is still relatively resilient. And we also had Jerome Powell testifying in front of politicians in Washington as to the Federal Reserve's plans for interest rates and their view on the economy. So we're going to take a look at what exactly happened during that first half of the two-day event for Jerome Powell. He will also be testifying in front of Washington tomorrow as well. So we'll take a quick look at what transpired over the day today. Now, in terms of earnings plays, guys, we're not going to cover earnings today. I have a little bit of a tight schedule tonight, but there were a few notable earnings plays on the day that came out. We had JD.com, Abercrombie & Fitch, and Foot Locker, your major movers. Now, we'll just go over those very, very quickly, guys. JD.com actually had a pleasant earnings report to the upside. You can see ending the day 16% in the green after they reiterated the fact that they do believe in the turnaround for the Chinese consumer later on in the year. JD.com is one of Alibaba's biggest competitors, and they bring in a roughly fair same amount of revenue on a yearly basis as Alibaba. You can see here that, as of last year, even this year, they brought in pretty much over $160 billion in revenue, which is slightly more than Alibaba, but I like Alibaba more as a company, guys. They're just a better, more well-rounded company, and they do have better financial ratios as well. Alibaba, despite bringing in roughly the same amount of revenue as JD.com, they bring in 2.5 times the amount of free cash flow. So that's a net positive for Alibaba. They also do significant more buybacks. JD.com announcing some buybacks and a first-time dividend over the course of the day today after their earnings. I just like Alibaba's position as a company better in terms of their financial ratios. So we won't go over those. I do believe that they're suffering pretty much from the same thing, which is the drawdown from the Chinese consumers' discretionary spending, but optimistic about the return of potential discretionary spending to the upside later in the year. So I like Alibaba better than JD as a company. And in terms of the valuation, guys, the two companies are trading roughly the same at about 10 times trailing 12-month price to earnings ratio. And on a forward basis, guys, about an 8-9 for both companies. But as I've explained, guys, Baba is just set up better for the long term, more buybacks, higher free cash flows, and just better margins as a whole in terms of the company. The second earnings report that we had, we'll go over that real quick as well, is Abercrombie & Fitch. So Abercrombie & Fitch, we brought that up a few times on the channel so far. Absolute rocket ship, outpacing NVIDIA. One of the best performers in the entire market, guys. You can pretty much compare this with the returns of SMCI. They've done twice the returns of NVIDIA since roughly the same period. Very, very strong company. However, they did report earnings today, and they reported a double beat and raise on guidance. So that was very good for the company. The only negative for this company, guys, is that they are fully valued at this point. So I don't believe that there's much meat on the bone left in this trade. Can the stock continue to push higher? Sure, it can. But do the fundamentals support it? Not really, guys. It's trading at roughly a 4.5, 4.6 peg right now, which is extremely rich. And most of their growth story, guys, has at this point already been priced in. If you take a look down here, you can see that the expected earnings growth for the next 2 years, although they will be growing at a decent pace, guys, it's nothing substantial anymore. Most of the growth really came in between, 2022 and 2023. So they're going to be leading into very, very tough comparables leading into the future quarters. And even in terms of revenue expansion here, guys, you can see revenue expansion, although it is existent, it's only about 5% per year for the next 2 years. So a lot of this growth recovery story for Abercrombie & Fitch has now been baked into the share price. I got to give it to them. They really changed the brand around in the last 2-3 years. And now they are collecting all of those rewards for turning around the brand. But at this point, guys, it's really an overplayed trade in my opinion. You may be able to get, 10, 20, 30% more to the upside, but will this stock continue doing what it's done in the past 12 months roughly? I really don't believe so, unfortunately. That being said, very good company, happy for their turnaround story. They've really been leveraging the heck out of social media viral marketing and partnering with influencers to get some of their revenues back on track here. And it's performed very, very well for them. And the third one that we're not going to go over, we'll just do briefly, guys, is Foot Locker. So Foot Locker had a tremendous drop on the day today. Nothing new to them, however. They've dropped over the past couple of earnings, guys. Look at these earnings drops, 30% today. Last 2 quarters ago was roughly the same, 28% to the downside. This quarter here, roughly 28% to the downside. So they've been no stranger to downside in the past year. And that's just because they had a terrible problem with inventory buildup during the pandemic. And then they have had to liquidate that inventory at really, really low prices, roughly close to their cost basis on a lot of this. And they're currently in the process of turning around the brand as a whole. They hired a new CEO in the past 2 years. Who had previously been the CEO of Ulta Beauty. So she is a very, very, good CEO in that respect, a veteran of the game. She's no stranger to growing brands and turning brands around. However, she's inherited a slew of problems with this company, guys. So this company, unfortunately, they just got absolutely crushed from 2022 to 2023. Look at this drop in EPS, guys, and will not be recaptured over the foreseeable next 4 or 5 years to, those pre-2023 levels, 21, 22. And even in terms of revenue, guys, right, their revenue is largely going to be flat over the next 4 years as well. So Foot Locker, a bit of a struggling brand right here as a whole. I would not be playing this one. It is definitely a turnaround story in the future, but their problems have likely still not bottomed out. They actually guided for this year again that it will be a bit of a turnaround year for them, bit of a transition period. So not expecting anything big. They're even expecting a slight decline in EPS over the year and a slight decline in revenue. So this may be a revisit at a future date, but for me, I'm kind of staying away from this one. So those are just some very quick recaps for earnings from today. For tomorrow, guys, we're definitely going to be covering Broadcom and Costco. And then on Friday, guys, we're probably going to be covering 1 or 2 more that I didn't have time to do over the course of this week. Might want to touch on MongoDB. I'll be very honest with you guys. I don't know a lot about this company. I'm curious to learn more as they are highly regarded by most analysts out there. The stock on terms of a technical basis is looking quite good for future upside growth. And they have been growing revenues and earnings per share fairly aggressively here into 2023 through 2026, and revenue growth is really starting to hit its exponential curve as well. So I really want to take a look at their earnings that's coming out tomorrow to just get a better understanding of the company, what they do, and how they foresee the next couple of years for the growth of this stock. So those are just a few that we're going to cover over the course of the next 2 days. So keep an eye on those ones. Now, before we get into a bit more technical analysis, guys, we're just going to take a quick look at the heat map, see how the markets were performing on the day, and then we'll get right into what Jerome Powell had to say today. So on the course of the market, guys, right, everything pretty much in the green for the day. Stark contrast from yesterday's trading, right? So every single index in the green and was largely led by semiconductors once again. So remember, this chart yesterday was heavily in the red, now having a very decent turnaround led pretty much by NVIDIA to the upside. But your legacy big tech names, guys, still down. Apple and Google still continue their march to the downside. We did have some nice green here by Meta, but even Microsoft and Amazon trailing, and Tesla just continues its rut and just continues hammering down now into the mid 170 range. Decent performance on financials, decent performance on healthcare. So your sector rotation continues to remain healthy, and even your intra-sector rotation, right? So most of your big tech was down in terms of technology. However, semiconductors making up for those slight losses in your other big tech names. On the 1-day relative, you'll see that it was a very nice turnaround day here. Only consumer cyclicals and communication services leading to the downside. Communication services, big reminder, guys, largely led down pretty much by Google at this point. Unfortunately, Meta not being able to counterbalance that. And then a few more negative names on the downside here, Netflix and Disney more specifically. So with all that being said here, guys, let's get into exactly what happened with Jerome Powell over the course of the day today, because that was some major news, right? So here is a few of the headlines that we went over today during Jerome Powell's 3 hours of testimony. We'll just go over a few of them. as a whole, guys, not much has changed. It's pretty much all the same, right? Higher for longer, and they're still waiting to see more data in terms of being able to bring down interest rates. So really nothing noteworthy that Powell came out and said today, but we'll go over the headlines nonetheless. Fed's Powell, rate cuts likely this year, but more evidence is needed that inflation is tamed. Classic. He's been saying this pretty much for the last 2-3 months at this point. So, a few of the headlines. Chair Jerome Powell reinforced his belief Wednesday that the Federal Reserve will cut its key interest rate this year, but said it first wants to see more evidence that inflation is falling sustainably back to the Fed's 2% target. Powell's comments to a House committee largely echoed those he made at a news conference January 31st, referencing the last committee meeting on Wednesday, January 31st, when they came out with their no change decision for interest rates. Since then, however, government reports have shown that inflation picked up from December to January and hiring accelerated. So that's pretty much talking about the hotter than expected January inflation reports that we got in CPI and PPI. Now, those signs suggested that the economy remains hot, and the process of further slowing inflation will likely be uneven from month to month. But Powell did not express concern about the inflation data. Instead, he noted that according to the Fed's preferred gauge, the PCE report, which we went over a few times here, but just a quick reminder here, guys, the PCE report for January was beautiful, coming down to pretty much 2.4% on an annualized basis. Very, very nice downtrend. So that's their preferred gauge. So that's what he's referencing here. Right? He said inflation has eased notably over the past year, even though it remains above the central bank's target. Of course, on the first of his 2 days of semi-annual testimony to Congress, Powell also suggested that the Fed faces two risks: cutting rates too soon, which could result in a reversal of progress in reducing inflation. Obviously, right? Don't want people to get go back out at once and start spending money again, or cutting them too little or too late or too little, which could weaken the economy and hiring. So if they wait too long with interest rates high, it may just begin to hurt the jobs market and hurt economic growth as a whole. So they're kind of trapped right now, right? Really trying to thread the needle. The effort to balance those two risks marks a shift from early last year, when the Fed was still rapidly raising its benchmark rate to combat high inflation. So now, not a question of going up. It's just, excuse me, it's just a question of timing the move to decrease rates at this point. Now, he had some further comments as well. We don't want to have a situation where it turns out that the 6 months of good inflation data we had last year didn't turn out to be an accurate signal of where underlying inflation is. So once again, just using different words to say they need more data. The Fed chair added that with the economy healthy and unemployment low, which is what we saw, decent jobs reports as of recently, and decent GDP numbers as of recently, he says, we think we can and should be careful in deciding when to cut the central bank's benchmark rate, which is exactly what he said January 31st on that FOMC meeting. Now, lastly, Powell also underscored that the Fed's policymakers believe they are done raising rates, which is what we knew already, which are likely high enough to restrain the economy and inflation. He stressed that the Fed's rapid rate hikes in 22 and 23 haven't led to higher unemployment. That's actually fantastic, guys. If you were to ask someone to predict that, I'm pretty sure nobody's models would have predicted that higher rates would not lead to higher unemployment. So that's pretty fantastic in terms of the Goldilocks scenario that they've been talking about, right? And under questioning, he added that he foresees little chance of a recession, which a year ago was widely predicted by most economists. Here's the quote: "There's no reason to think the US economy is in some kind of short-term risk of falling into recession." Well, that's because GDP numbers are strong and unemployment levels are still low. So your economy just keeps moving forward despite high rates. No recession predicted by the Federal Reserve. So as a whole, guys, not much new information. We'll see what comes off the press here tomorrow in terms of what he says. But as of now, nothing new per se. In terms of your job report that we got today, guys, we got a little job report called the ADP employment change. This is just a gauge of the private sector jobs. And you can see that we did add about 140,000 jobs here for the month of February, which is fairly good. It goes against the estimate. The estimate was a bit higher at 150K, but still not too far off of the estimate. Slower growth than predicted prior. However, still relatively healthy, guys. Definitely not dropping off a cliff, which is what we wouldn't want to see. And so all of that data combined over the course of the day today just led to the fact that potentially interest rates will only see a cut into June and July, and your interest rate probabilities reinforce that as well. You can see here in terms of your June probability meetings for an interest rate decrease, we are pretty much standing at no change from relatively a day ago, right? So a day ago, we were pretty much pricing in 60% odds for the month of June to drop at least 0.25%. And as of today, guys, it's dropped to about 56%, but it hasn't been a drastic change. Just Powell once again reinforcing higher for longer. We need more data. So obviously dropping the rate probabilities a bit further, but June or July should indeed be the first decrease in terms of your interest rate. So not really much changing today. Yields going heavily to the downside over the course of the day. So we'll take a look at that after we cover our indexes. So let's cover our indexes right away, shall we? And we're going to lead it off, guys, with the fact that the bears are just not following through. When they get a big move to the downside, they just can't flush these markets. Just goes to show you guys that the buy the dip crew is alive and well. If you take a look on the shorter time frames here, guys, we might still be looking out for the 4-hour lower high into lower low, and that would probably send us into a potential daily downtrend as well. So keep a very close eye, guys, on yesterday's low. Yesterday's low is absolutely crucial for the bulls to protect. If they lose it, your SPY goes into a daily downtrend. SPY has really not had a daily downtrend, guys, since the month of October pretty much. So that would be notable to us if we get our first daily downtrend here. It would also somewhat line up with your seasonality that I've been preaching since mid-February, which didn't materialize. There was no drop in the month of February, and so far in early March, we are not seeing much of a drop either. So if we were to lead into a daily downtrend, that would most likely signify, guys, that we're going to take a little bit of a break and start cooling down potentially even the weekly timeframes. I'm not expecting that heavy of a sell-off, but could just be a time for some extended consolidation in terms of 2, 3, maybe 3.5 weeks of downside before resuming this beautiful rally. But as a whole, guys, your bulls are still in control. As I said, keep a key watch on yesterday's low. Bulls need to protect that. If not, we end up in a daily downtrend here, and then we'll be targeting the bottom end of your trend line to act as protection here at around the $500 round mark. So just keep a very close eye on SPY, but as of now, bulls still in full control. And even on the weekly, guys, bulls are still in absolute full control of this market right now. Nothing bad to say whatsoever. Now moving on to QQQ. QQQ, same analysis, right? Yesterday's low is absolutely crucial. If we lose yesterday's low here, set the daily downtrend, that would be the third daily downtrend that QQQ has completed since pretty much the end of January. So in roughly about a month and a quarter, 3 daily downtrends would just tell me that the bulls are kind of getting tired. Now with QQQ bulls, which I do believe, guys, if the markets drop as a whole, I do believe that your QQQ bulls will be the ones dropping the most. If that does materialize, keep a close eye on what financials and healthcare are doing, because in my opinion, when QQQ has a significant drop, these two will not drop that much. They will probably be the ones holding up SPY in that regard. Now, in terms of your direct QQQ analysis, yesterday's low is absolutely key. If we lose yesterday's low, daily downtrend will be set, and we'll be keeping an eye, guys, on the lower end of the trend line, which is sitting roughly at around $430 to act as a bit of consolidation area and last line of defense for your bulls. Obviously, if we lose the trend line right here, well, we'll just be an extended weekly consolidation. Then we really have to keep an eye, guys. 422 is your most recent weekly higher low right here. So if we lose that, you'll lose the weekly uptrend and you will be in for a little bit more monthly consolidation at this point. However, I don't believe that we're going back to touch the previous all-time high areas. That would be a significant drop, right? Talking about maybe 7 all the way to about 10% more downside, which from the top would be a total drop of about 9 to 13%. That's a little bit heavy, guys. It could always happen. Just know if it does happen, that is most likely the area where we are going to stop. So even if that does happen, guys, it will be a tremendous buying opportunity for 2024, that of which I'm convinced. Now moving on to financials. Financials also looking very healthy on the day, guys. Up 0.5%. And financials, we were worried whether or not this was going to break down into a daily downtrend, but the bulls were able to save the day pretty much, right? Nice tightening range here using your 12 EMA as defense, and now breaking up towards the upside. So daily uptrend simply continues at this point, and we'll be targeting the higher area of resistance, which is your previous all-time high, talking about 41 all the way roughly to $42. So we're really almost there. And if there's one area that I do believe financials will get rejected and potentially have to do a little bit of weekly consolidation before making a second attempt at it, it will be those all-time high areas. So just keep a close eye on that for financials. As of now, bulls in full control. Where I get a little bit nervous is if we lose the $40 level and we start setting a daily downtrend under these moving averages, which we've held for about 4 months at this point. So a loss of those moving averages with some short-term bear control here will be notable to us. And that's when I do believe we'll get at least 2-3 potential weeks of downside consolidation here, potentially into the 39 area. Now moving on to healthcare. Healthcare also looking fairly decent on the day here today, 0.68% to the upside, but healthcare has really been trapped for the last couple of days here in this lower 145 range. So what we're going to be watching out for, guys, is a loss of these lows right here, 144.50. Key level to be paying attention to. If you lose that, you set pretty much one of the first daily downtrends in motion that healthcare has had since the month of October. We had one back here that lasted only for 1 day where they flushed the lows and then the bulls were able to bounce back. But if we get a sustained move down here under your moving averages, under this beautiful 12 EMA, that is also when I do believe healthcare will take a little bit more of a dive here for about the next 2-3 weeks. We're going to be looking for a weekly higher low, and the previous all-time highs is going to be the area where I do believe we fall back on, talking roughly the 142 level, which is very nice confluence with our 12 EMA, which is curling up this yellow line right here. So we're just going to be looking for weekly higher low, pretty much anything above 137, tons of space just for a weekly higher low for further trend continuation. So looking very good. Now moving on to IWM Russell, growth stocks also not performing too bad on the day today, 0.75 to the upside, and we are still above our big area here of resistance, which has been resistance for pretty much a year and a half at this point. Nice to see the bulls closing above. So we are still in a nice little daily uptrend at this point, setting the higher low yesterday and trying to push to higher highs. Now, if the bulls can get this, perfect, your daily uptrend simply continues. But if the market chooses to roll over on SPY over the next few days, daily downtrend there, QQQ, daily downtrend there, let's say that happens, well, IWM Russell will likely follow the same fate in setting a new daily downtrend at that point. And then we'll just be looking out for a bit of weekly consolidation. Anything above 190.4 is just going to be looking for a weekly higher low at this point, guys. And we will be looking for this fallback zone, which was previous resistance, this red box, to be acting as some very juicy support. I don't think that the bears are going to be able to get through it this time, even if we do have a broader market pullback. So I'll definitely be looking to buy some dips. If we pull back into this area, use it as support, guys. You guys know why I like this trade so much. It's the infamous breakout, retest, and run trade, usually a very high probability trade. I'd like to see 197, even as close as 195 as possible to be entering any positions. Now moving on to the Dow Jones here, guys. Dow Jones is indeed in a daily downtrend. So your first index to set the daily downtrend is the Dow Jones. A lot of this recent weakness, guys, has been due to Apple. Apple obviously representing a big component of the Dow Jones, and unfortunately just not getting the job done right now. So now the second day that we've traded below our 12 EMA without much, without much support by the bulls. You can see on an intraday basis, we even rejected to this previous line that we were watching, right? This yellow line, previous big resistance for daily bulls, should have been acting as support. They did use it as support ever so briefly, but now we're under it. And now you guys know when we're under the previous support, it now becomes resistance, and the bears were able to use that. We'll see if that continues into tomorrow. If we just continue this daily downtrend down, it is notable to me, however, guys, now only the third time that we have been trading below your moving averages. So if we just continue this move lower and lower and now close below the 26, this orange line right here, you can see we have never closed below the 26 EMA ever since this rally started in October. So that's going to be very notable to us, guys, if that does happen. And now, since we are in daily downtrend, it is currently weekly consolidation for the Dow Jones. Good thing that your weekly higher lows are all the way down here, 37,100, to set a weekly higher low off of any further weekly consolidation. Keep an eye on your weekly 12 EMA. 38,100-ish is going to be the mark for the Dow Jones. So as of now, daily bears are in control, but bulls trying to hang on by a thread. If we really get that flush, guys, it will be a notable weekly pullback, but the Dow Jones has tons of space, guys, to pull back even for the month of March and even early April. Back to these all-time highs, guys, it's not that far away, but it would be a considerable drop. That is your next big area of support, and it would be about a 5% drop top to that area. So just keep a close eye, guys, on the next few levels coming up. First big one here to the downside is going to be, once again, 38,100, and the next one to the downside is going to obviously be your previous all-time highs, starting that range 36.9 all the way to about 36.4. Now let's move on to our yields. So yields just continue their movement down. We have been watching out, guys, for this monthly lower high into lower low, with rates predicted to be coming down over the course of this year. Now, how did we know that it was the monthly lower high being set? Well, we need to see when are these weekly bulls done. And the weekly bulls are only done to the upside when we lose the daily time frame. So you can see this daily trend. They had a nice daily uptrend going right here, and then we lost it right around this day here when we set the first daily downtrend. We knew that the weekly high was most likely set, and now we're looking how much of this move can the bears take back to the downside. And so far so good. They're putting in an extended move down, which should lead us into, guys, inter time frame correlation here, should be leading into monthly downtrend continuation, weekly downtrend reset, and also just the continuation of daily downtrend to the downside. I would not be surprised if this continues pretty much, albeit at a slow pace. Keep in mind, right, these are yields, they're not growth stocks, so the yields do move relatively slow, but I would not be surprised, guys, by the midpoint of this year, talking about, anywheres in April, May, June, where we're pretty much at 4% on the 20-year, or even maybe under that mark as well. Would not be surprising, considering that yields are coming down later on in the year, and we really should have no reason to be speculating that 10-year yields will be even 4.35% in 10 years. I think that's a little bit of a stretch personally, and even 20 years out as well. So that's pretty much it for yields. Now let's cover a little bit of crypto, then we're going to go into our major tech names, of course, and lastly do my portfolio. Few new trades on the watch here, so I do want to update you guys with that. Now, Bitcoin, heck of a recovery from the flush that we got in yesterday's trading, pretty much still relatively close to our all-time highs. The one thing that we're going to be watching out for, guys, is can the bears recapture this 4-hour downtrend and really set some daily consolidation underway? So far, it's not looking like that. It does look like the bulls potentially want to have another stab at your all-time highs. Keep an eye on 69,400 is going to be your new all-time highs after breaking your previous all-time highs yesterday. So the bulls still look like they're in full control, guys. A little bit tough to be buying around an all-time high. Usually the correct strategy to be buying after an all-time high would be waiting for the breakout retest of the all-time high, or a potential failure at the all-time high, and then we're looking for a weekly higher low to make a second attempt. So either the breakout retest or the failure and then retest lower and second attempt. That's usually the type of trade that I want to be making to the all-time highs. Just trading at the all-time highs, buying here, hoping for a breakout, it's really not a very good strategy. It can work sometimes, obviously, but if you want to be technically correct, you have to be waiting for the breakout retest or the weekly consolidation into the second attempt. That is a far higher probability trade for continuation to the all-time highs and beyond. But so far, so good. Bulls looking fairly decent. Nothing bad to say, right? Your daily higher lows are still set. Since we didn't close a candle here, daily higher lows, in my opinion, still 60,400. So any dip, just looking for daily higher lows still, and for a potential rally if ever we fail that and set the daily downtrend, you're just into beautiful weekly consolidation, guys. And anything above 38,800-ish is just going to be for a weekly higher low, for, as explained, a second attempt at that all-time high, right? So Bitcoin, personally, myself, I'm looking for anything with a 50,000 handle. So 58 all the way down to 55 is going to be my next area that I'm targeting for a DCA, or breakout, retest of the all-time high. I'll be looking to play the retest. Now moving on to Ethereum. Ethereum also looking fairly strong, stronger than Bitcoin, as a matter of fact. You can see Ethereum sell off yesterday, and now Ethereum actually closing higher than the sell-off price. Bitcoin not the same. So Ethereum running nicely into the day today. Bulls still in absolute full control at this point. Higher highs pretty much all the time. So this is just one daily move right now. Any pullback, just going to be looking for a daily higher low. Anything pretty much above 29.15, just going to be looking for daily higher low for further trend continuation. So bulls in absolute full control. Yesterday's trading really changed nothing. And if for any ever which reason, guys, we start setting some daily downtrends, it'll just be for extended weekly consolidation at that point, looking for Ethereum higher lows here, potentially in the $3,100 area would be a good mark. In terms of future resistance, guys, we're now above our 3,600 area of previous resistance. We'll be looking now to the all-time highs. It really represents the next big area of resistance. There's really not much in this zone right here. Next area, guys, 4,900 for Ethereum. So everything looking fairly good. Now moving on to big tech here. So Apple still dropping on the day here, guys, today. 169.12, down 0.59%. And now Apple's in a position, guys, where we are at our most oversold since pretty much 2018. RSI levels here is hitting pretty much 21, 22. And I did a really big analysis on Apple yesterday. We spent about 5-6 minutes on this stock. So if you haven't seen the reasons why we keep holding Apple stock in terms of these issues right here, you can take a look at yesterday's video. We're not going to break them down again. We're just going to focus on the technicals, and the technicals just keep getting better here, guys, right? So Apple's still within our big area of support, 180 down to about 166, quickly approaching the lower end of that. It was previous all-time highs and is now current support as well, right? As you saw last fall, and should be acting as support currently as well. Now, one thing for Apple in terms of your daily oversold conditions, take a look at Apple, guys. I'll move myself over so you can see this RSI chart better. When has Apple been this oversold? So the day prior, we were a bit oversold, and we were talking about usually when Apple hits a bit oversold, usually has a little bit of a bounce. And you can see we do hit barely oversold a number of occasions in Apple's recent history. But how often do we hit the lower bound of this? 21, 22 on the RSI. Well, you have to go all the way back, not even COVID, guys. You have to go even further back to 2018 to find similar levels on Apple. Take a look right here. Event number one is going to be this little dip right here in 2018, if I can zoom in on it. So you can see that when we got this oversold on the RSI down here, that is this candle right here. It was then followed up by about a 4% move to the upside. It came even lower a few days after, but then we did have a sustained bounce rally from there. Keep an eye on this second one. The second time that it's happened in recent history was again in 2016. So look how far you have to go back, guys, to find RSI levels this crushed. Now, they got this crushed right here, which would have been these candles right here. And similar to the one in 2018, we had a little bit of a relief rally for 2 days, and then it did trade lower before moving significantly higher. So one thing's for sure, guys, is that whenever this does happen, and you can even see another instance of this here back in 2016, January, right? We had a low here, bounced for a couple days, made a lower low, bounced, lower low again, but maintaining the relatively the same area, and then really coming out of this nicely. So if we can derive anything from those prior events, guys, it's one thing, right? One thing is that we are probably going to get a little bit of a temporary bounce. Now, that being said, your bears are in control. So we're looking for a bounce here shortly, but it's just going to be for a lower high compared to 183.50-ish, right? A lower high, and then it's going to be up to the bulls to hold these lows, right? The daily bears are in control, so the expected move is lower high into lower low flush potentially, right? So that could be a scenario in which we get a lower high, lower low, hold these lower areas of support right here, and then we may get a chance to change this daily trend later on into potentially March or maybe even early April. So we are looking still to be dip buying as history is in our favor, but what history shows us is that it's not going to be this. It might be a choppy little ride around, but eventually it is coming. So buying in these lower levels historically is usually a fairly decent trade if you are willing to wait for it to play out, right? There is also a possibility that we just V-shape this. In my opinion, not a very strong possibility. In my opinion, since this move has been such an extended move to the downside, we are going to two-step this. So just keep a close eye on that for Apple. Just don't forget why we're holding this company, because it's one of the best companies in the world as well. That being said, your daily bears are obviously in full control, right? Daily downtrend in motion, looking for the size of this bounce to see how well bulls are positioned for a potential shift to a daily uptrend from a daily downtrend, and the size of this bounce to give themselves the best chance we need to get as high as about 176 to as high as about 177.50. Get me to 177.50 on one daily bounce. The bulls have a good chance of resetting a daily uptrend because they create enough space off the lows. But if we create a soft bounce here, only to about 38.2, and then your lower time frames roll over again, that's when you may get the double dip back down to your lows, which may be one of the final flushes for Apple stock. So Apple, I'm still very bullish on the company, and I love these levels. Now moving on to AMD. AMD cracking the new highs today, 210.63, very good move, by them. So still in a very nice daily uptrend currently. Your daily higher low is now set here, 199.04. So we'll see, can the bulls just continue this daily march higher? Obviously, since we're at all-time highs, guys, there's really no clearly defined areas of resistance. You just have to stay with psychological levels, right? 225, 250, 275, 300. So those could be some areas of resistance. Daily bulls in full control, weekly bulls in full control as well, right? Clear as day. Clear weekly uptrend. One thing's for sure, if we get a potential rollover here into a daily downtrend, then you'll just be in for some extended weekly consolidation, and your AMD bulls have a lot of space to work with here, guys. Keep in mind, anything pretty much above 163, just looking for a weekly higher low for further trend continuation. This whole area right here, top end of your prior daily range, right? Talking about roughly 185-ish, let's call it, is going to be your next likely area of support if the bulls do encounter some extended weekly drawdowns across the rest of the market. Valuation, guys, is not that bad. I did another analysis here at 200, right? They are pulling forward a lot of earnings that they haven't had yet. Keep in mind their competing product with NVIDIA is only going to be rolled out pretty much over these next 2 quarters. So they're baking in all the growth that they're going to be bringing in from this new product that they haven't even released yet. So just please keep that in mind when playing NVIDIA stock. Really, they're kind of like a proxy to NVIDIA. AMD. AMD's kind of like a proxy to NVIDIA right now more than anything, right? In terms of the valuation, like I said, I did some analysis at 210, at 200. 210 shouldn't be that different. It's only about 5% away, right? PE for 2024, 54, a little bit high, but in terms of their EPS growth for the next 3 years, gives them about a 1.13 peg, which is relatively cheap, guys. I have to admit, I did not like their earnings, as a lot of you know on the channel. Sorry, their earnings right here. As once again, I said, the stock price is disconnected from the financials of the business right now. The financials of the business are projecting a lot of growth, but they still haven't started delivering the product. Will people like the product? I'm sure that people will indeed like the product, but still pulling forward a lot of growth that hasn't yet even been products that have been sold by the company yet, right? So you're kind of taking a little bit of a gamble on AMD. Isn't it an educated gamble? Absolutely, yes. Would I be nervous about taking a trade? No, but buying up here, guys, still a little bit rich. I would still like to see some pullback, even though we were just trading in this range right here, guys. Semiconductors as a whole, if NVIDIA starts really dropping off for some extended weekly consolidation that we haven't had in over a couple of months now, that will probably be a better time to be buying AMD rather than buying when all of your semiconductors right now just keep hitting all-time highs. I've just never been a fan, guys, of chasing trades to the upside when they keep pushing new all-time highs. Now moving on to Amazon. Amazon pulling back on the day, 0.35%. So Amazon extending their losses on the week ever so slightly since that beautiful day on Monday. We're now considerably down, and we're going to be keeping a close eye, guys, on this level right here, 172.36. Lose this area right here, and you will be losing this beautiful daily uptrend. It won't be a daily downtrend yet. Daily downtrend, you have to have the lower high into lower low, but it will be a notable loss of the daily uptrend. And if the bears pull back too much, they create a lot of space to set up that lower high into lower low. At that point, we'll be looking for pretty much the gap fill here, roughly at $160. Obviously, we have one area of support before that, 166, lose 166, it's all the way down to the gap fill. And this personally, 160 is where I'm looking to play Amazon more specifically. Where are we getting rejected, guys? It's the area that I've been talking about for so long at this point, right? This prior area that we kept getting stuck at in 2020 and 2021. Company could just not sustain a break above and hold above and push higher levels. And we're kind of struggling with that same level right now. So curious to see how this one on Amazon develops. One thing's for sure, if we do lose the daily uptrend here into daily downtrend, just healthy weekly consolidation here. Keep an eye, guys, 166 level, as I said, your first line of defense, and then all the way down to about 160. I would be much more inclined to be buying down here at 160. Amazon's going to be doing some great things in 2024, and I cannot wait to add some shares and maybe even some calls to my position. Now moving on to Google. All right, so moving on to Google, had to have the classic coffee sip, right? Ooh, I have some Celsius energy drinks in the fridge as a proud Celsius, right? CLH. Before we get into Google, a little bit of a parenthesis here, guys. My apologies. Before we get into Google, right, I just bought some energy drinks from Celsius Holdings. I had been a shareholder in this company for a better part of the last 6 to 9 months, roughly, and I had never actually tried one of their products. They're actually very good, guys. The flavors are pretty good, and I'm pretty happy with that. So my few purchases of Celsius energy drinks have obviously been the reason, guys, that Celsius has been up, 40% in the last month and a bit. So I'd like to take largely credit for that move. You're very welcome for having purchased those energy drinks and making the stock go up 40%. So that being said, guys, all fun and games out of the way. Now, Google, right? Google still in a daily downtrend right here. And now we're approaching the lower levels. Google actually down another percent after having a nice little pop on the morning up to about 134.50-ish. Still closing lower here, guys. Google's still struggling with these lower levels. Now, which lower levels are we looking at, guys? Well, I may as well keep this one on the chart right now, right? We're talking about the current level that we're at right now. Let's call it about 132.50 all the way down to the lower end of this bound right here, which is going to be 128. That's a bit too high. So about 129 right here is going to be the range. And then we have our third range, obviously down below. Why are there so many ranges, guys? Well, because Google, this whole area for Google has been one massive area of congestion. There's just support and resistance all over the place. Obviously, the more solid one is going to be your final one down here, 127 all the way down to 120. But we do have a few intermediary ones, right? Like the one we just drafted on the chart, 131, 130 is a decent range. That's the next range that I'm targeting for my second line of defense. And my third line of defense is down here. All that being said, guys, I'm extremely bullish on this little dip on Google. It's an extremely attractive buying opportunity, talking about 15% off of your all-time highs currently. That is the type of discount that I like to see, and currently bouncing right now right around your 200-day moving average. So Google right now, even under its 200-day moving average, you'd have to go back a long time if you wanted to get Google under its 200-day moving average. So looking very good. That being said, your daily bears are in full control right now. So we need to see a bounce, guys, and we need to see the size of the bounce. If you want to recapture most of this move, we're either going to have to do it in two things, right? In either two fashions, either V-shape this, which is an unlikely scenario currently. The most likely scenario is putting in a bounce high enough that it gives the bulls the space to set the higher low into higher high. Keep in mind, guys, this big area of previous support that we had before, right? Big resistance, newfound support. That is going to be acting as resistance. That's why I say the likely scenario, in my opinion, is bounce all the way up here. This is going to act as resistance. Then the bulls are going to have to put in a higher low, and then we can maybe have a stab at it. So that's the type of scenario that I'm looking out for. But how will you know your bounce is underway? Need to recapture the hourly time frame, guys. And so far, we have not recaptured this hourly time frame, this entire part of this most recent leg down, which is marked right here from the 146. And that's what you can see, guys, right? Still no hourly trend change in sight. Same thing as Apple. This entire drop, guys, no hourly trend change. Where's the hourly trend change, right? Only one back here on Apple, and that was just denoting your lower high into lower low flush. So we need to get that daily bounce underway and then measure the size of the bounce. For the bounce, if we were to start it from here, guys, I need to see the bulls get at least as high as about 137 personally, and that would be better for Google. If we continue dropping, I will just continue adding to my position, and if we get down into the 120s, guys, that is when I'm going full leap call options. Now moving on to Meta. Meta, not looking bad, right? 1.2% to the upside. Meta still just hesitating up here at its all-time high, so looking fairly decent daily uptrend in motion. We're going to be keeping a very close eye, guys, on yesterday's low. If you flushed yesterday's low, you will set a daily downtrend. Meta has not had a daily downtrend since pretty much the month of October right here. So if that does happen, it will be notable to us. We will also most likely lose this 12 EMA and this line, which was previous resistance, which is now support. So if we lose all three, daily downtrend, loss of this line, loss of the 12 EMA, that's when you know most likely probabilities do favor weekly consolidation. And then we're going to be looking for a weekly higher low, anything above 453.75, just for a weekly higher low for further trend continuation. So Meta working with a lot of space, no red flags as of currently. Moving on to Microsoft. Microsoft continuing its daily downtrend. So one daily downtrend here, the bulls tried, but nope. Second daily downtrend here. When I get two daily downtrends like this in such a short amount of time, guys, weekly consolidation is likely to stay currently. So we're looking at a potential weekly downtrend, guys. That would be a loss of 396.96. Let's just call it 397. Lose 397 and we're almost there. We tapped it today, 398.51. If you lose these lows right here, guys, it'll be weekly downtrend. You will be joining Apple and Google in weekly downtrend. So three of your many, so there's, if you take the magnificent seven, right? Well, at that point, Microsoft would be number 4 because Tesla, Apple, Google, and Microsoft would be in weekly downtrends. The only ones that wouldn't be are Amazon, Meta, and NVIDIA pretty much. So just keep an eye on these weekly downtrends. They are definitely notable to us if we lose those lows. That being said, if we do end up in a weekly downtrend here, guys, we are just looking for the monthly dip buying opportunity, which in my opinion sits pretty much around the 380, 375 region, just looking for a monthly higher low for further trend continuation. So I'm looking forward to any and all Microsoft dips if they do happen, targeting this lower 380 to 375 region, this whole area right here like we've been talking about previously. As of now though, doing a good job of protecting these lows. Just keep an eye on how the markets develop in the next few weeks. If the broad market continues a sell-off here and the indexes go to daily downtrends, I would not be surprised if Microsoft goes and touch these 380 levels once again. Now moving on to Netflix. Netflix not looking that bad either, down 0.014%, so really nothing on the day today. Netflix, we're going to be on the watch for this level right here, guys. 570 is so crucial. Not only is it roughly your higher low sitting right here at 568, but it's also a level that we previously just broke out of, right? It was a big level here, 575. Big level here, guys, that we broke out of. It was your previous resistance from 2020 and 2021. So we need the bulls to play some defense around this area. Now, that being said, the daily bulls are still in full control. Daily uptrend, just looking for the daily higher low, anything above this right here, daily higher low for further trend continuation and protecting the 12 EMA nicely. But if for ever which reason we roll this over into daily downtrend, I'll be looking for the bulls to protect your 575 region. Your weekly higher low is a bit lower than that, 551. Going to be looking for the hold and potential run. So keep an eye on that for Netflix. Netflix not looking too bad. No red flags. The red flags really arrive, guys, if we flush this 575 and come a bit lower, then you could be set up maybe for a weekly downtrend, but would be highly unlikely, in my opinion, for Netflix to do that on its own. It would really need some broader market sell-off to make that happen. Now moving on to NVIDIA. So NVIDIA having another fantastic day on the day, guys, today, 3.18%. And if you notice, guys, I never really talk about the RSI on NVIDIA because apparently it doesn't even matter for this stock. So it's pretty funny, kind of like crypto in that respect. But nonetheless, NVIDIA almost $900. So $900 is your next area of psychological resistance. And then obviously we get into the $1,000 range, which would be absolutely crazy for NVIDIA. Now, that being said, daily uptrend clearly in motion. So until we, at the point in time where we lose this hourly uptrend, right? If we lose the hourly uptrend and goes into extended consolidation here, you're just going to be looking for a daily higher low. Anything above 769, just a healthy daily higher low for further trend continuation. The red flag happens you take back too much of this move. If we see an engulfing move by the bears, it could set up for lower high into lower low. And since NVIDIA earnings are a while away, could just be some decent time for some weekly consolidation here. If I see some weekly consolidation, I would not be surprised, guys, if we do head back down to these levels, 760, 750 range, this big previous area of resistance, which should now be support. It's going to be my first target for weekly consolidation, and the 12 EMA should be right there as well. So just keep that in mind for NVIDIA. As of now, looking all good. We're looking to the downside move. We're looking for an engulfing move. Only then can you be more sure of if we get a lower high here, taking a little bit of a short trade right here for potential downside continuation, but still dangerous trade, counter trend trade. As of now, serves no purpose trying to short the tops, guys. You just get continuously destroyed until you wait for more bearish confirmation with an engulfing move, right? So now moving on to Tesla. So Tesla, I mean, looking pretty dire today, right, guys? 2.32% of the downside. We just moved to new 52-week lows, so cutting our previous lows that we set early on in February, 175.82. We've now moved even lower on the day today, 174.05, before closing higher at 176.54. So as I was saying, guys, this candle right here did it for me. As soon as I saw that we lost the daily uptrend, you lost your daily higher lows, I knew that your weekly bears were just going in for another weekly leg to the downside. The weekly bounce was not convincing enough to give the bulls enough space to set the higher lows into higher highs. That's why I focus so much, guys, on the size of a bounce in relation to the most recent move. It holds true whether you're looking at the hour, the 4 hour, the daily, the weekly, the monthly chart. It holds true. The size of the bounce is always key to gauge who is still in control. And in this case, your bears are still in full control. Any bounce at this point with the size of this move down, guys, talking about probably about 13%, right? No, even more, about, 13, 15% at this point, right? The size of this move down, any bounce at this point, guys, I am expecting a lower high. This most recent support level will be acting as resistance. Your moving averages will also be acting as resistance. I would not be opposed to seeing a bounce to about 191 before getting rejected. And then we'll be looking once again to potential lower lows as we just continue this weekly downtrend, daily downtrend as well. So your monthly, all the bears are in control of this chart, right? Monthly bears, full control. Weekly bears, full control at this point. And your daily bears now back in full control. So there's really no reason to be bullish on this stock as a whole, other than the fact that we are approaching a very big area of support, guys, right? 180 down to about 170. I'm going to lower my expectation for Tesla. If Tesla now moves below into the lower 170s, 160s, I'm going to be looking for 160 or 150 puts, which is the bottom area. So I'm going to be looking to sell those puts in the lower end of this range, trying to get as big of a discount as possible, guys, because this is a company that's very out of favor right now, right? Most recent price cuts, demand problems, not just specific to Tesla, but the EV industry as a whole, guys. And if Jerome Powell just keeps rates higher right now into June, even July, and there's maybe only 2 or 3 interest rate decreases, very tiny decreases over the course of this year, Tesla is just not going to be the same, guys. And keep in mind, we've not made any money on Tesla shares since November 2021. So just keep that in mind. 2.5 years, guys, of just being pretty much flat at this point, right? So it kind of sucks to be a Tesla shareholder, but you have to set the expectation and know that it's a cyclical business, and they're probably not going to get out of this anytime soon. So that's why if I am going to be playing them, I need to be compensated by lower and lower prices for it to be worth it for me. As of now, your bears, are in full control. Now moving on to Palantir. Palantir performing quite nicely today on the day, guys. They got a nice little contract, got the news article pulled up right here. So Palantir actually had a new contract from the US government in terms of one of their defense systems. I believe it was about $180 million contract, if I'm not mistaken. So that was a decent amount of news on the day today, right? Palantir surges above buy point after winning US Army contract for Project Titan, about $178 million contract with the government. So that's very, very good. And the stock was up about 10% on the day off the back of that news. So bulls now back in full control. That's what we were looking out for, guys. The bulls with a beautiful engulfing move, right? Here's the thing, right? Step one, bears control the daily downtrend. After that, we look for the size of the bounce, and the bounce got to 100% before we were looking to set a daily higher low. The size of this bounce led us to believe that the probabilities of the bulls seeing a higher low into higher high was a very high probability, and that's exactly what transpired right there. So looking very good right now, pop above, daily bulls in full control. At this point, recapture daily uptrend means that your weekly higher low is also set down here. So weekly uptrend is absolutely gorgeous on Palantir at this point. We are now going to be targeting the higher end of this range, guys, about 2850, 28 up to about 2850 is the next target for Palantir. No red flags whatsoever. Bulls in full control of all time frames, monthly full control, weekly full control, daily full control, looking good. Keep an eye this area, guys. Next area of resistance, 2816. And I still maintain I am only comfortable buying Palantir, guys, if we come back down $22, $21, $20. But in my mind, that'll only happen if we get a broader market sell-off. And now lastly, PayPal, guys. So PayPal not looking too good here today, 0.26% to the downside. Once again, approaching our area of cannot lose. So I said it was a good thing that PayPal had gone back above this area because now the bulls can potentially use it as support and mount a rally above. Well, looks like they're just not ready here, guys. Still battling. Look how much we've been battling with this overhead trend line. That's why I say it's so important, guys. It is the one thing that keeps holding back PayPal every time we try and use these horizontal support and resistance levels. We keep getting rejected here by the bigger bears that are just sitting on top of this trend line, looking to short every time we make a move into it. So at this point, guys, not looking the best. That being said, we're in an in-between area. 60 to 57 is still the big area of congestion that we've been talking about. Now, if we break below this area in the next few days, it sets up the bears for the lower high into lower low flush. And at that point, I've kept saying it, guys, we're probably going down to $54 and just continuing this extended sell-off. The valuation is obviously not a problem for the company. The problem is the fact that 2024 is once again going to be a transition year from PayPal. They said that in their most recent earnings quarter, and that was not what people were looking for. People were looking for results now, results this year, not another year of transitioning the business. So PayPal, still a bit of a hold for me right now. Only really becomes a buy if we do break below those levels, which is what I'm expecting if the broad market does sell off. And to the flip side, guys, well, your bulls still have a chance at saving these lows right here. If we can put together a little bit of a bounce, at that point, we need to break above these most recent highs, 61.63, to reset the daily uptrend in motion. At that point, you will be saving your weekly lower levels too. Right? If we break above that, we will be saving our weekly levels at that point too, and we will be breaking above our downtrending channel line. But as of now, guys, I maintain I will only be bullish on PayPal's ability to gain the levels back up to $70, $75. It all starts with a break and hold above this downtrending channel line right here. So keep a close eye on that. So that's pretty much everything for the stocks today. Now let's do a quick look into my portfolio. All right, guys, so I want to keep this one a little bit short. Just want to talk about the new positions. You can see here that not much has changed, still maintaining roughly the same positions from the Monday video update. The only two that have changed, guys, is the SoFi play that I made yesterday. So at the height of the SoFi sell-off yesterday, I sold these $7 puts here. I got about 25 cents for them. These are the March 15, so still about a week away, and was very, very happy, guys, to get, 3.7% roughly. I don't know how much that is. Let me do the math right here for you guys. 0.25 divided by $7, right? About 3.6%. For about a week of trading. Was very happy about that. If you guys don't know what happened with SoFi, well, we covered their earnings when their earnings happened roughly about a month ago at this point, and I was very happy with the turnaround story of this company. Very good growth, and you can see that right down here, $7 all the way down to about $6.50 is your next very big area of support. Let me just draw that for you on the chart right here so you can see it very clearly. So I was very happy with going with these $7 puts. After understanding the reason for the sell-off yesterday, they dropped about 15% because they were offering, they just basically did some accounting, right? So they offered new long-term debt. So they were basically raising money through debt, and that debt can be convertible into shares in 2029. But now keep in mind, guys, so if all of the debt was to be resumed, it was about $800 million in debt, and their market cap is roughly sitting about 7.23. Let's call it about 10%. So they did add potential, since those bonds that they issue are convertible into shares. Well, it could have a potential dilutive effect if all of those bondholders were to redeem all of their bonds into shares at a price of roughly $9, it's stipulated in the contract. Then it would probably be diluted by 10% at the current market cap. So SoFi selling off about 15%. But they were actually very smart in the reason why they did that. They actually had debt maturing next year, and they obviously had outstanding preferred shares that they had to pay 12.5% in annual dividend payments on. So they kind of did two things at once. They raised more capital, and with that capital, they bought back the existing debt that they had for next year for cheaper, and then they just pushed it back 5 years. So all in all, guys, it wasn't that bad of a news report. I just saw it as a buying opportunity, and I'm very happy to potentially be owning some shares of SoFi. That being said, I only did 2 contracts, guys. Really, really small. I could be adding more. The reason I left it open to add more, right? You guys know in relation to the other positions, this is very small. I will add a couple more contracts here, guys, if we dip down into the $6 level, if the sell-off continues. But I like this company at these current valuations. Very, very decent business. The rest pretty much stays the same. The only things I changed today, guys, I closed the Alibaba contracts that we had. So if you remember, I wrote these 71 puts earlier on in the week. You can see that right here. We wrote these, I don't know why it says 0, it's 71. We wrote the 71 puts for about 53 cents. We closed them here today for 6 cents. We used that capital to write pretty much the same stock strike price on Shopify for 71s, stock trading around 73 right now for 23 cents. So we got an extra little bonus here. You can see on the chart why I chose the Shopify. Shopify was featured in my Sunday night's video. Shopify, very, very simple, guys. Just breakout or retest, right? Previous resistance should now be acting as support. Just a monthly, right? Breakout, retest of the range, looking to run. Very, very good. Like their earnings as well. That's why I took that position. And then we did add a little bit of Apple, guys. We did a 45-day call on Apple. The 170s entries, and I got them at $5.10, waited for them a majority of the day, and was happy with the price that I got at 3 p.m. in the afternoon. So you can see here we got filled for about $5.09. And the logic is as follows, guys. I'm expecting, as we were looking at on the Apple chart, I am expecting a small little bounce in share price here. Not looking for a massive V-shaped recovery here, but if I can get a little bit of a bounce here all the way back up to 175, 176, that'll be enough for these calls. Why 45 days, guys? Well, because your time decay really starts kicking in 30 days or less. So I always, if I'm doing a short-term call play, I always want to go about 40, 45 days out. And I'm just looking to play a bounce, guys. If you want to know the expected value of your potential contract, you can go on optionsprofitcalculator.com. And here I plugged in all the data for my current call, given the current share price. And you can see, guys, that my expiration date is the April 19th, right? And you can see, I'm not sure if you can see these percentages very well, but you can see I'm only really expecting about 5% increase in Apple share price, which brings them up, 175, 176, 177. If that does materialize here in the next 2-3 weeks, you can see that I'll probably be very nicely rewarded anywhere between 33 and roughly, 70, 80%, depending on a number of factors, right? Depending on how quick it happens, right? How much it goes up, but you can see fairly decent play. And obviously, guys, well, if we close below, then I'll obviously have to trade close the trade at a loss, but it's a good way to get some leverage on a play while still being conservative with it as well. I'm just looking to pretty much make a couple extra $100 on this Apple play, not looking for this call contract at 2, 3, 4, 5x, right? Obviously, if it runs heavily back to 180 before April 19th here, pretty much, up until roughly April 6th, if it runs to 180, I'll make a 2x on this contract. I'd be happy making, $250, $300, which would be roughly, anywhere between 60, 70% on the contract. So that's what I'm looking to do on Apple. Just looking to play oversold conditions into a slight little bounce right here up into the 175 level, which is a fairly conservative bounce target, if you ask me. So continuing to play the dip on Apple aggressively. So that's pretty much everything for the portfolio positions update. I did add a little bit of a swing trade here on MRK, only about 28 shares, not even 30 full shares here, about $3,400 position. MRK, very simple trade here, guys. Once again, just looking for the potential breakout retest of this zone. Didn't quite wait for it. The actual weight would be at about 120, but this one looked good as a whole here, guys. We did get a little bit of a shift here to our hourly bulls. So I was looking for, when is this daily move down here into 4-hour oversold conditions? When is it going to stop? I was looking for the bulls recapturing the hourly trend. And when I saw them put in a nice move like this, engulfing yesterday's previous highs, engulfing, trying to set the lower high here, I jumped in at the end of the day when I noticed that the bulls were trying to make an attempt here at the 15-minute trend change, which could translate into a hourly trend change into tomorrow. A little bit of after hours trading here. Shouldn't mind that. So I'll be looking tomorrow if this does continue. And our upside profit targets for this trade, guys, are going to be roughly around $127, $128. So little tiny swing trades, guys. I'm just trying to take as many of these share swing trades as I can. You see I still have 2 active, SPGI and MCO. Just for those of you who have smaller account sizes and who are looking to make fairly conservative swing trades here with a little bit of capital on solid companies. You'll never see me making these trades, guys, on no-name, relatively weak companies that don't have strong fundamentals. So that's just a bit of some swing trades that we did over the course of the week. I'll give you guys another portfolio update on Friday's video. So hope everybody has been doing well. I will see you guys in tomorrow's video. Consider dropping a like on the channel if you appreciated the content for today. Thank you so much once again for 800 subscribers. If ever you're new and not subscribed to the channel, you can consider doing that too. We do these updates Monday to Friday, every day after the close. And obviously, guys, if you have any questions whatsoever, I will answer them down below in the comments. Anything at all. If you want me to look at a specific stock, technical analysis, potentially an earnings play that I might have missed, an options play that you're thinking about, anything you want, comment down below, guys, and I'll be very happy to answer you. So take care. I'll see you guys in tomorrow's video. Peace.